Hey folks, I'm Joe Anderson and this is Beyond the Bell. Today I want to talk about emotional investing. In my opinion, there's two. Is the frantic investor. When markets go down, they freak and they sell, but when markets go up, they're elated, they're happy, and they buy. When good news is on the TV, they buy. When bad news is on the TV, they sell. This is a recipe for disaster because what are you doing? You're selling, right, when your accounts are low, and you're buying when the market recovers. Of course, we've heard this a million times. You don't necessarily want to do that, but when our emotions are tied to our money the way it is, it's almost impossible not to react that way. So just have a disciplined process to make sure that you're doing the right things with your overall investments. The second is the people that love certain stocks. If I went to Atlanta, Georgia today, what do you think most people buy in Atlanta, Georgia? Coca-Cola, right? How about here in San Diego? What do you think people love in San Diego? Qualcomm. How about St. Louis, Missouri? What do you think people are buying there? Anheuser-Busch, right? So they're buying what they know. They're emotional to those overall companies. My grandfather worked for General Electric for 30 some odd years. They lived and died by that stock. It almost broke them. When you have that type of emotional tie to a particular company, I get it, but you have to be extremely careful of looking at the grand picture of your overall financial dreams. So let's keep emotions with our relationships and get emotion out of our investments. That is today's Beyond the Bell.
Are you prepared for retirement? Sign up for a free financial assessment with a certified financial planner professional from Pure Financial Advisors.